Welcome to Rising Leaders of New York with your host, David Zwerin of Hill & Moin, LLP. They present to you conversations with today's and future leaders of New York City discussing the challenges and issues relevant to New Yorkers. You can find this show at www.hillmoin.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Now here are the hosts of Rising Leaders of New York.
Hello, everybody. My name is David Zwerin. I am an attorney with the law firm of Hill & Moin, LLP, located at 2 Wall Street, right here in New York, New York. We are a small plaintiff's personal injury law firm focusing specifically on helping injured victims in serious accidents on someone's premises, particularly construction sites. However, I also get the pleasure of hosting this podcast, Rising Leaders of New York, where I get to talk to interesting guests who have a lot of very important information to impart to our listening audience about the topics that you as New Yorkers need to know about. And today I'm very excited to be joined by Kyle Kirby of USI Insurance Services. We're going to have a very exciting and informative chat about some of the important issues that people need to know when they're thinking about what kind of insurance should I be buying? Do I have enough insurance? Do I have lapse in my coverage or blind spots that I'm missing? As a personal injury attorney, one of the issues we come across, particularly in motor vehicle cases, but it can occur in all sorts of different settings, is people who think they're getting insurance that's adequate to protect them when they get in a motor vehicle accident, only to find out they've been seriously injured and they're at the mercy of another driver who's driving around with $25,000 of coverage. And all of a sudden, that's all the money that is really available to satisfy them. Or they get sued, God forbid, and have some horrible, terrible accident and realize they put their assets at risk because they didn't adequately protect themselves. So I expect Kyle will have a lot of interesting things to say about the topic of insurance today. So with that in mind, Kyle Kirby, welcome to Rising Leaders of New York.
Hi, David. Thanks for having me.
So Kyle, tell us a little bit about yourself. What do you do at USI, and how did you get into the insurance profession?
Well, that's a good question, especially the journey of getting here. So a little bit of background on myself. Originally, what I went to school for back in college was to be a teacher. And that's what my primary background is in education and teaching. That was a shift in focus after graduating school, and I started looking for other opportunities, other ways to kind of fill that passion of mine. And I found my way to the insurance industry by starting working for a local State Farm agent, and then progressing all the way now to where I am at USI Insurance, which is a national brokerage with offices all over the country. Primarily, at least, in New York City, we have one, Westchester, Florham Park, New Jersey, and on Long Island as well. And I take that educational consultative approach that I have from the teaching background and apply it to what I do every day with my clients.
What were you? What specifically were you teaching?
Yeah, it was history and social studies. That's what was the original germ of the passion, for sure. Primarily American history, Civil War era, things like that.
Interesting.
Did a little student teaching. Enjoyed it. Just the educational system at the time just was. There's reasons for me to kind of move in a different direction, so that's what I did.
And what kind of insurances do you specialize in?
Yeah, so personally, I specialize in personal lines insurance or personal risk. USI has multiple divisions for small and large commercial, employee benefits, et cetera. So, but personally, I focus on personal lines insurance. So that'd be like auto insurance, homeowners insurance, and personal liability.
Now, so I teased this a little bit in my introduction, but what are some of the issues you see where people make mistakes or people don't quite understand the law or how to best protect themselves when they're making the decision, what kind of insurance should I get now that I have a motor vehicle?
Yeah, no, that's a good question, David. And I'll tie it in directly to your comments on liability, things like underinsured motors as well. The biggest issue I found is insurance in general, especially auto insurance, and homeowners insurance has become incredibly transactional for clients. And more often than not, you find that clients will purchase, their insurance policy for the first time, whether it's auto insurance, maybe through a 1-800 call center, get a policy so they can drive a car off the lot that day and don't really put too much thought into some of the details and the coverages that they have, primarily those being liability. In New York State specifically, the minimum requirements for liability are incredibly low. You mentioned it before, David, 2550 being that number. Essentially what that means for those who don't understand, that's bodily injury coverage, 25,000 being the most that your auto insurer will pay for bodily injury liability claims for an individual, and then the second number being for mostly like an accident's worth of people, and that's where the 50,000 comes from. So I've noticed that people.
Just to be clear, if my family were to let's say to rear end somebody tomorrow, and we hit a car that has 3 people in the car, and we cause them hundreds and hundreds of thousands of dollars of potential injury, they turn around and sue us. Am I correct that the limit on each individual in that car could get is 25,000 per person and 50,000 to be split amongst all of them, right?
Correct, and that's if you're carrying the state minimum coverage. That's right. And that's what we see. A lot of people are not carrying the proper amount of coverage there, and often what happens there is it's just a lack of probably understanding from the client's perspective of actually knowing what those coverages do for them. And like I said, just being conditioned to the market kind of being very transactional. That's why it's important to have somebody that you work with that's an advocate for you and an advisor that can give you advice along the course of your life as your needs change. Because more often than not, that auto policy that you purchased when you were 18 just to get the car off the lot because you couldn't afford anything more, right? Maybe that's the reason you got the minimum coverage. Well, maybe now, 10 years later, you have a house, you have a significant other or a spouse, and you have many more assets potentially at risk, and that state minimum coverage is not going to be enough to protect those.
Now, for bodily injury, I assume that as you raise the limits, let's say you want to go from 2550 to 50 or 100 or 250, 500, or anything like that, I assume the rates are going to increase considerably under the policy. So, if New Yorkers can get the cheapest policy available, why would they want to pay significantly higher premiums?
Yeah, it's a good question. So just on a specifically, per dollar basis, yes, increased coverage is going to be more when it comes to the actual premium. But the perspective I like to take when it comes to conversations with clients is to remember that, yes, you might be paying, a little bit more in your premium now, but if you don't take the additional coverage, the potential losses down the line for a claim, as you mentioned, David, $50,000 for an entire accident's worth of people is not going to cut it in almost every instance. Even if you think about just from property damage, the minimum coverage in New York for property damage is only $10,000. I mean, you drive down the road, you're going to pass many vehicles that are worth more than 10,000, and that's just not going to be enough. So, if you think about it from the perspective, yes, maybe I'll pay a couple bucks more. And in most cases, to go from one stage to the next, you're really only talking about a couple dollars more per month. In a lot of cases, those are going to that increase in what you're paying monthly it pales in comparison to the financial burden you might have if you don't carry enough. And then to take this one step further, when you're looking for other insurance options down the line, insurance carriers do consider how much liability coverage you are carrying on your policy. So those who carry more, let's say you had, 250,000, 500,000, are more often than not going to get a better rate, all other things being equal, than somebody who's carrying state minimums. So the long-term effects of that actually are more beneficial on rating than it is if you just always have the state minimums for the entire time that you own your car.
Now, if somebody wanted to get bodily injury coverage, but think, okay, well, I own a house now. Maybe I own a very nice house, or I have lots of nice properties in my house, like jewelry and TVs or whatever else they want to protect, and they don't want the risk of accidentally being at fault for maybe a terrible injury where maybe they cost hundreds of thousands, maybe millions of dollars to someone in an unforeseen catastrophe and having all of their assets, all of their life worth put at peril, what would they have to do to get an umbrella policy? And like, what exactly is an umbrella, an excess policy? And is that something that someone could get if they were just getting a 25, 50,000 policy? Can they get the minimum amount of BI coverage and then protect themselves with a big umbrella policy?
Sure, I'll address that question first. The answer to that is no. You do have to carry.
It was rhetorical, but I
know. Yeah, you do have to carry a certain amount of underlying liability coverage in order to qualify for an umbrella. Overwhelming majority of cases, that would be the 250,000, 500,000 in bodily injury coverage that I mentioned before. There are some cases, depending on certain umbrella carriers, where you can get away with 100,000, 300,000, but then the pricing is off. So usually it doesn't make sense to do that. Typically, you want to go 250, 500. And to answer the other part, as far as what umbrella insurance does for somebody, umbrella insurance is, like you mentioned, David, like an excess liability policy that kicks in the event that the underlying amount of coverage you have on your auto or homeowner's insurance is exhausted in a claim. So if, your scenario before, David, you get into an accident with somebody and they have 3 people in the car and it causes a ton of liability, lawsuit damage, tons of injuries over the $500,000 limit you have on your auto insurance policy, assuming that you have that and then you also have the umbrella. Once that 500,000 is exhausted, starting at $1 million in umbrella coverage, that's when that would go in. So then you can get increments, usually going up $1 million, in some cases going up way higher, up to $20, $50 million in excess coverage, depending on the client. The more often thing that you see is people opting for like $1 million, $2 million, $3 million in umbrella or excess, which is critical for people who do have assets like a home, in those scenarios in which you don't have enough coverage to completely recoup somebody for damages they have in an accident or some other type of claim or lawsuit that you might have. Those potential, those assets you have, like a home, a secondary home, whatever those are, could potentially be at risk in a lawsuit too.
How broad are most umbrella or excess policies written? Like, you indicated it could be available in the situation where I get into an accident, I'm at fault for causing someone or multiple people severe injury in a car accident. But what if I injured someone on a bike, or someone tripped and fell in front of my sidewalk? How broad could an umbrella policy possibly be to protect myself from all liabilities? What if I wanted to be protected from more than just being a bad driver? I swear I'm a good driver.
Yeah, no, exactly. And in those cases, you're absolutely right. Those would also apply. You could even be going to the grocery store. Let's say you're pushing your shopping cart and you're checking your phone at the same time, and you roll the ankle of some nice little old lady that's, checking out and looking at some can of beans or something. In that scenario, that could potentially be a lawsuit. Your liability on your underlying homeowner's insurance will often extend to those scenarios. Contract language can vary from carrier to carrier, but almost in every case, that's going to apply. From the underlying home, and then again with the umbrella or excess policy kicking in afterwards. There is some differences too between umbrella and excess. Excess is quite literally just excess on top of your underlying auto or home, whereas umbrella can get a little bit more broad in terms of covering you for things that maybe wouldn't be covered under your auto or homeowner's insurance. But like you mentioned, someone trips on your sidewalk. I use this example a lot for a client that I had of mine who had a secondary home up north that they stay in during the summer. Obviously, during the winter, the weather's a little bit different. There's some ice on their driveway, that they weren't able to keep up with because they weren't there physically. Someone was walking down the road, slipped and fell on the ice, and that was their property, and that was considered their liability claim. Situations like that are perfect examples of why someone needs the excess coverage and liability from an umbrella or just a standard excess policy.
Are there any insurance issues that people should be thinking about if they're in the position of potentially owning multiple homes? What if they have like a primary residence and a rental home or something? Mm-hmm. What are some things people should be considering about how to properly protect themselves when they start having multiple residences?
Yeah, so in mentioning that before, quite very important to have the excess coverage there, just because you have additional exposures, right? Not only that, but the actual contract language needs to change in terms of the way the policy is actually written. So oftentimes people forget to do this when they're buying a secondary home, or whether they're maybe buying a new primary home and then taking their old primary home and making that a rental. You actually need an entirely new policy in order to cover that rental home, as opposed to just a standard primary use homeowners insurance policy. Because the liability is very different for the carrier, and they need to account for that. Obviously, with you're right. I'm writing a rental property for David Zwerin, but I don't know who the tenant necessarily is as the insurance carrier, so they have to rate for that differently. And so yes, if you're having rental properties, additional homes, it's just even more important, to make sure the policy is written correctly to protect you, because if it's not, there's every potential that the insurance carrier can deny the claim, which what's the point of it having it in the first place? And then the second piece being, making sure you have the additional liability coverage, because you just have that one additional exposure. And I would apply that to everything. I would apply that to you if you have a boat, if you have, a motorcycle. Any additional lines of coverage is just an additional reason to have umbrella or excess coverage.
What if somebody, let's say my family got into an accident tomorrow? We're responsible people. We have a ton of bodily injury coverage to protect our assets if we're at fault, but this time we're not at fault. Somebody else rear ends us, and that person's driving around with $25,000 to $50,000 of insurance. And all of a sudden, that's all the money we can sue that person for. Is there anything I could have done to potentially give myself the ability to recover more from my family now that I'm seriously injured due to someone else's negligence? Or am I just stuck with $25,50? Could I have avoided that?
Yeah, yes, you could have, David. That's a very
What
good
could I have
question as
done?
well. Well, you could have purchased some additional underinsured motorist coverage, which is available pretty much on every auto insurance policy contract. It is also required by New York State law as well to carry uninsured or underinsured motorist coverage on your auto insurance policy. However, it is also still only required for the minimum coverage of 25,000, 50,000, in which case, more often
So I
than not,
don't
then
have to get 250, 500 or something like that to protect my family?
well, you should if you want to properly protect your family, and that's what I was about to get into. Yeah. So those are, and the even better part about that is that the actual rate difference premium wise for purchasing additional coverage for underinsured or uninsured motorists is very marginal. I mean, we're talking pennies. It's not a huge difference in order to make sure that you're properly protected there. More often than not, anytime I'm writing a policy for somebody, I always recommend that they have matching uninsured or underinsured coverage that matches their base liability coverage. And pretty much every carrier that's worth anything is going to do that automatically, but there are definitely exceptions in which they might just decrease that as a cost saving measure, as opposed to just actually doing the right thing and properly protecting the client. You can also purchase additional uninsured motorist coverage on a umbrella policy too. So that's another way to give yourself additional protection. And it can be very broad as well. Uninsured motorists can even extend to you if you're a pedestrian. So if you're, let's say you're going for your morning run on the road and someone drives past you and it's a hit and run or something like that happens, and you're not able to either locate that person or they're not insured enough, your own base auto insurance policy that you have that you carry for your own car will help protect you in that scenario as well.
So I'm very glad to hear that that's the thing that you talk about with your clients, is getting that extra level of protection of uninsured or underinsured or supplementary underinsured motorist coverage. These things, we usually refer to these things in short as UM, UIM, SUM.
Yeah, insurance
and
jargon.
I'm correct if I'm wrong, but all policies in New York basically just come with state minimum $25,000. But most
That's
people
right.
don't know that they have the option to increase that. And in my experience, having purchased policies before I became a personal injury attorney and knew anything about how these work, I usually found that the person with the insurance company just wanted me to get more and more BI coverage, because I imagine that's probably where representatives make most of their money. I know you indicated that the rates don't go up that much, but correct me if I'm wrong, the margins I imagine are better on the BI side than the UIM or SUM side, where it's very cheap to raise your protection quite a bit, correct?
Correct. And more often than not, that's because the frequency at which a claim is actually made against that is less than on standard bodily injury coverage or property damage. Just more often than not, it's not used all the time, but it does get used in those rare instances where you need it.
Right. And this is something that I think is very valuable for all potential motorists, and certainly it's good for my current clients to know, or anybody's current clients to know, and it's good for people who might be in an accident, God forbid, in the future, to know while they still have control over their future. With BI, all that has to happen to put your BI in risk is for an accident to happen and someone to sue you. And then that's it. That's the trigger. Someone just has to say, you're at fault, I'm coming after it. For that UIM claim to potentially come into play, there has to be a lawsuit first, generally. But really what has to happen is that you got to hire a lawyer. The lawyer has to put your own carrier on notice to protect that claim, that there might be a potential claim afterwards. But then what really has to happen before it could ever even come into play is that there has to be a surrendering of every last dollar of the underlying bodily injury policy. And that UIM policy or SUM policy, it needs to exceed the amount of the bodily injury. There has to be some sort of difference between the two. Let's say the responsible BI tortfeasor, the responsible party, has $25,000, and I went out and got $100,000 of SUM. Well, then I could, correct me if I'm wrong, be able to make a $75,000 claim. But first, I'd have to show convince the carrier for the BI that their insured is 100% responsible and cough up every last dollar, and that just doesn't happen all that often.
It doesn't, and it's very rare, especially in New York State, for things to be 100% someone's fault in some cases. You see it a lot with maybe like a rear ending. I think that your example was really good for this. If we're going to do that, if you're the one doing the rear ending, you're probably going to be considered 100% at fault. But I've seen some really, really strange scenarios in which clients that you would think logically would be either 100% in the clear or 100% at fault just ended up not being the case for varying reasons. Oh, you should have been able to anticipate this person making that decision, or checking your mirrors before you made every single turn, even though you're making a legal turn. So there's definitely all those scenarios that definitely come into play. Which is why it's critical to make sure the coverage is right, because you don't want to assume that it's going to be right when it happens. Unfortunately, too many people do that, where they think, okay, well, I have insurance. One of the biggest misnomers in insurance in general is the term full coverage. You hear that a lot. There's a lot of people who take that at face value. I'm fully covered. Well, you don't really know until the scenario actually comes up, which is why it's important to review it.
What exactly does that mean when someone says they're fully covered, and why would that be anything less than full?
So there's two different ways to look at it. And when you're talking about full coverage, we're going into a different realm of more talking about damage to vehicles there, and for your own vehicle. So in order to get a car on the road in New York State, you don't need to carry any coverage for your own personal vehicle. You just need to carry the liability, personal injury protection coverage, uninsured motorists, like we've discussed. But when people say full coverage, they're usually referring to, I have a 2018 Honda Accord, and I would like to have comprehensive and collision coverage on this as well. That will protect me there. People think when you add that, they have the thought of full coverage, and they maybe apply that to their entire account, which is just not necessarily the case, depending on what their actual limits are.
We've already this year seen some pretty severe storms. As we record this today, I'm not quite sure when this episode will drop, but just in the last week, there were gigantic fires in Canada causing a huge smoke condition. So weather's getting more extreme. A lot of issues that were previously unexpected or unforeseeable is happening. What are some of the issues you're seeing with catastrophe claims these days?
Yeah, the biggest issue being is that they're increasing, and that they're happening in places that they traditionally and historically weren't happening before. Florida coast, California wildfires. These are things that insurance carriers have a pretty good understanding about. and can be prepared for making decisions whether or not to be in a market or not. But we're seeing more often that the severity of losses and claims are happening in different places and are way worse than they were before. Add that to various issues we have with inflation and things of that nature. It's very much impacting, especially on the homeowners insurance side, the replacement cost on houses, which is a different conversation when it comes to liability. Now we're talking more what it costs to actually rebuild your home if you had a total loss, to bring it back to where it was before you had that claim. And things like that. So, the biggest reason I like to bring this kind of conversation up, so it's so important to have somebody that you work with that is a broker or somebody that can shop through multiple markets, because the insurance industry and the market is tightening. It's happening every day, week. We get new updates about certain markets that carriers maybe are or aren't interested in any longer. And it's because of all those factors, the increased claim severity, how much it costs to actually repair things, whether it's a car, maybe even in cases like increased, severity in terms of volume and size of lawsuits for liability purposes, those are going up too. And in those cases, it's really important to navigate the market, to actually find a place with a carrier who is able to give a favorable coverage and rate combination for a client. And, you can do that the best by working with somebody who can actually go through the market, have conversations with underwriters, and come back with real solutions.
Kyle Kirby, we are just about out of time. It was a great pleasure having you on. And if any of our listeners want to get in contact with you, if they have questions about their insurance needs, or get, whether or not they're looking to buy a policy or not, they just want to pick your brain, like, what should they be thinking about to protect their family, whether they're looking to make a decision or not? Can people get in touch with you if they have any questions?
Yeah, absolutely. I'm happy to provide a cell phone number and an email, if that's good, David.
Sure, go ahead. Whatever you like to provide.
Yeah. So if anyone would want to reach out to me, my direct phone number is actually my cell phone, is 845-381-3380. And then my email is just my name, kyle.kirby@usi.com. Happy to discuss anything with the client to make sure that they're at least properly protected, whether they move forward with options with me or not. Happy to always educate and help.
Insurance is something I deal with, every day as a personal injury attorney, and I see it from the side of dealing with those clients who have had a terrible injury, and sometimes a lot of times in a car accident, finding out, they didn't adequately protect themselves. They didn't have the UIM or SUM to protect themselves if they were not lucky enough. Lucky is lucky in quotes, to be injured by maybe a big commercial truck, or God forbid, they don't have the adequate protection for their assets. So these are the things that I deal with a lot of time when I have these clients. We have to commence these lawsuits and find out what insurance exists, and it's really important for people to know what they can do to protect themselves before they eventually need to retain a personal injury attorney, because God forbid something terrible has happened. And it's good to know. So I appreciate you coming on the podcast today, Kyle. Thank you so much for joining us. Again, my name is David Zwerin of Hill & Moin LLP. If you are looking to contact a personal injury attorney, because God forbid you've been in a serious car accident or injured on someone's premises or had a construction accident, you can reach me at 212-668-6000. You can also find us on the web at Hill, Hill, Moin, MOIN.com. Until next time, everybody, I'm David Zwerin here, and I look forward to speaking with another rising leader of New York. Goodbye, everybody.
You've been listening to Rising Leaders of New York, hosted by David Zwerin of Hill & Moin LLP. You can catch prior episodes at www.hillmoin.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Thank you for your positive reviews, comments, and sharing the show with others.